$6.3 billion worth of stock going through the market. It was green across the board. Every single sector traded higher. In fact, looking at the top 20 stocks on our market, and only 2 of them traded lower, and that was NAB and QBE. Outside of those 2 stocks, we saw the rest of the blue chips rallying. Telstra was a clear standout, up by 1.9% today and reaching a 52-week high. In fact, a number of stocks reaching a 52-week high, and on a day where we did see a rally of 1%, you don't usually expect the defensive stocks to do well, but we saw Telstra hitting a 52-week high, Primary Healthcare reaching a 52-week high, as well as APA, all defensive stocks. We have a look at Telstra stock over the past year. This is what it looks like, up by 34%, and that's not including a dividend yield of 6.6% on the stock at the moment, so doing extremely well. Having a look at Primary Healthcare, and this stock is up by 20% over the past year, and it doesn't have a high dividend yield. It's got a yield of just 2.7%, but it has been growing earnings quite strongly. Earnings were up by 49% in the full year. And finally, APA, we have a look at this stock, up by 20%, and this stock, of course, has a very high dividend yield of 6.2%. And this is really the trend that we've seen in 2012, where investors have either gone for stocks with very high yields or a strong growth story. These weren't the only stocks to reach 52-week highs today. We have to also include Perpetual, which is up 50% over the last 52 weeks, and also Crown, which is up by 25% over the past week. On the flip side, though, we did see some stocks also reaching 52-week lows, and we did see both Sedgment as well as Ausdrill reaching 52-week lows. Now, both these stocks are in the mining services area, so it really does show the mentality of investors at the moment, where they are going for the secure earnings or the secure dividends and staying away from the mining services and the uncertain areas. So all in all, a good day for the Australian share market, but some light volumes ahead of that Thanksgiving holiday.
Been very much in focus this week. Lynas, look, you just can't keep it out of the headlines. More moves today in what is an incredibly volatile stock. Look, signalling potentially the start of this processing plant in Malaysia, very much underpinning moves today.
James, we talk about Lynas a lot, and in the short term it's all about this Malaysian processing plant, and it does look like they will start processing from this plant this month, so this is good news for Lynas shares. That's the short term. However, the medium and long term picture, we have to have a look at the supply and demand fundamentals in the rare earths market. Traditionally, this area has been dominated by China, which still supplies more than 90% of rare earths to the market, but since the peak that we've seen in prices, we've seen some rare earth prices actually falling by as much as 80%, and that's because other supply is starting to come online, and the key advantage that Lynas had was the first mover in this space. And as other mines come online, it really loses that first mover advantage, and in fact prices are now starting to reflect that more supply is coming online. And so it's really about the supply-demand fundamentals in the medium to long term. Short term, however, we are seeing some of the shorts being flushed out of Lynas's stock. The Malaysian processing plant is really what the short-term trade is about, and today the stock up by 7.1%.
Peter, good moves today. Is it a buy racing for the Julia Lee diversified portfolio?
I think with Santos, the upside really comes in 2 to 3 years' time, when we do see that production profile coming through from the Gladstone LNG project and the Papua New Guinea LNG project coming online. One of the things to consider is around this time we see a lot more supply coming online in that gas market as well, and the US market is something to watch. They're going to be exporting to the Chinese market, so we could see prices coming under pressure here. But Santos today, I think, rallied because of one key line in their update, and that is that they don't need any extra funding until 2015. I think there had been a bit of concern in the market after the update on the 12th of November, where we did see the Papua New Guinea costs and the capital expenditure forecast blowing out to $19 billion US. Today, some of that fear was allayed, and we did see Santos up by 1%. They said that production was going to increase in 2013, and the wild card here, I think, comes from the shale gas story. Now, Santos is one of the first on board to be producing shale gas, and if the shale gas story really takes off, then Santos is actually in quite a good seat to take advantage of that shale gas story. So today, up by 1%. It does look like no fears around a capital raising or extra funding required for its developments to come online, and that was positive for the